Hello, everyone. Hi, it's Annie Brock from the Leader Transition Institute. We are here for Learn, Do, Grow, Repeat, our monthly session where we help people who have been through changing focus, moving from we to me, learn advanced concepts and other things that are applicable to their transition from the military into the civilian sector. But we also like to serve people who are currently serving service members and other veterans who maybe haven't been through our program, providing them with information about things that are important to them or resources that they need to know about. Today, we are fortunate to have Anthony Guzman with us. He is from the Veterans Resource Team, and today we are going to learn about VA home loans. He is an expert in this arena. Because he's self-taught, and he'll tell you about that in just a minute in his introduction. Anthony did a briefing for us about 2.5 years ago, and we decided it was time to update it and get updated information out to all of you. So thanks for being on with us today. Anthony, would you please introduce yourself? And when you're ready, I'll bring your slides up.
Okay, thank you, Annie. I appreciate the invite, and it's always a pleasure to come and educate. My name is Anthony Guzman, retired Navy. I did 27 years and I retired back in 2018. And then I quickly transitioned over to a mortgage company teaching VA home loan education to active duty and veterans. The reason I did that is because it was a lot of information that I didn't know, I wasn't aware of. And as I started working and educating, I soon realized that I did a lot of things wrong, right? I used my VA home loan benefit 4 times during my career, and I overpaid every single time. Why? Because I just didn't know what questions to ask. So I started working for that company, educating, did that for about 3.5 years, and just quit that company. My views didn't align with that company anymore. So a group of us retired E9s decided we were going to create a nonprofit called the Veterans Resource Team, where we educate veterans on VA home loan benefit and also assist them on VA claims, VA employment resources, entrepreneurship, life insurance, whatever the veteran needs help with, we're there to assist. But this class specifically is your VA home loan benefit. Go ahead, Annie. All right. So the VA home loan benefit. This is probably one of the most underutilized and most misunderstood benefits that we have. All right. So a little bit of background. So this program was first created back in 1944. So Franklin Delano Roosevelt created this program so the service members coming back from World War II had an opportunity to own a piece of land that they just helped defend. And that's how we feel. We feel that if you donned the uniform and defended this country, then you should own a piece of the land you helped defend. There's no ifs, ands, or buts about that. The VA pamphlet 26 tax 7, that is called the Lender's Handbook. That tells the banks, the lenders, the credit unions how to write the loans according to the VA. It's a very thick and boring book. So if you're into reading thick, boring books, and this is right up your alley, Chapter 4 is probably the most important chapter. That's the credit and income qualification chapter. And Chapter 12 was called the minimum property requirements. So when the appraisers go out and appraise a property, they're going to go off what's in Chapter 12. Eligibility. Active duty service requirement. All you have to do is 90 days in wartime to be eligible for this benefit. Now, we've been a country at war for as long as I can remember, and we're still a country at war. So if you served during this time, then this 90 days during wartime. If you weren't active duty during wartime, then you need to have 181 days during peacetime. Reserve and National Guard requirements a little bit different. You have to have 90 days of non-training active duty service or 6 years worth of service in each of those to be eligible to utilize the VA home loan benefit. Spouses are also eligible in certain situations. If the spouse's veteran was a prisoner of war or missing in action, then the spouse is eligible. Or if the veteran died in service or from a service-connected disability, the spouses may still be eligible as well. So my background was I was a corpsman, had a few combat tours. I had friends that did not come back. So their spouses are still eligible to utilize their benefit or this VA home loan benefit, and not a lot of them are aware of it or understand how they're eligible. So if you know somebody, a Gold Star spouse, Gold Star family member that's looking to utilize to buy a home, remind them to take a look at the VA home loan benefit, because they may still be eligible to utilize that. Now, there is a stipulation that the spouse needs to be single until the age of 57, so they cannot remarry. Why 57? It's in the lender's handbook. How the VA came up with that number, I have no idea, but it's in the lender's handbook, so we do brief it. And everything we brief is straight from the handbook. So this is factual information for you. Your certificate eligibilities. There's 3 ways to get this. The first way is you could fill out this form, send it into the VA, hope somebody sees it and processes and get your certificate back to you. You could go to any bank, lender, credit union that is authorized to do VA loans, and they can pull your certificate for you. Or you could do it the easy way. You get an account on ebenefits.va.gov. There's a housing section on that webpage. And within that housing section, you can pull your own certificate. And I would encourage everyone to pull your certificate by yourself and take a look at it before you go in and start shopping, especially those that have bought before and sold your VA loan or the house on the VA loan, because you want to make sure that home is off your certificate. We've seen a lot of people that have gone to try to purchase a second home, and the home that they sold 4 or 5 years ago is still on their certificate. It's an easy fix, but you want to make sure that that is taken care of before you start that process again. This is what your certificate will look like. It will tell you and whatever bank, lender, credit union you're working with, your entitlement code, your funding fee, prior loans, basic entitlements, and conditions. So you see here that Mr. Sample is an Army veteran. He has a current home in Pennsylvania. The loan amount was $300,000. The entitlement charged was $75,000. So the entitlement charge is the 25% guarantee. So if you hear, us talk about the VA loan, it's a guarantee 25%. Well, how does that work? So in this situation, if Mr. Sample defaulted on his loan for $300,000, whatever bank, lender, credit union that owns that home will foreclose on that home. Then they're going to sell that home. They only need to sell that home for $225,000. Why? Because the government already promised them that $75,000. So that's how that 25% guarantee works. And that allows us veterans to purchase that home, no money down. Now, loan structure, meaning who can finance. The veteran themselves can be on that loan. The veteran and the spouse, of course, 2 different veterans. If you have a relative or a best friend, or your mom or your dad's a veteran, you can combine your entitlement to purchase that home. Now, caveat to that is the VA home loan is a primary residence loan, meaning you have to intend to live in this home. In most cases, it's up to a year. There are exceptions to that policy, but after that year is over with, then you can turn that into a rental, Airbnb, whatever, and go ahead and utilize your remaining entitlement to purchase another primary residence. But for initially, you do have to intend to live in this home as your primary residence, both veterans, if they're going to be on that loan. If you're going to purchase with a non-veteran, there's some lenders that will not allow that with the VA loan. Why? Because the VA is only backing the veteran's portion of that loan. So if you're going to partner up with somebody that's not a non-veteran and purchase that home, in most cases, they're going to require a down payment because the veteran is only going to be backed by the VA. The non-veteran will not be, okay? The Blue Water Vietnam Veterans Act of 2019 has some major changes to the VA Home Loan Benefit Program. The biggest change is there's no more cap for full entitlement. So what does that mean and how does that work? Full entitlement means you don't have a current VA loan, or if you never used it before, you have full entitlement. So if you have no ties to a home and under VA loans, then you have full entitlement. In that situation, there's no amount of loan that the VA will not guarantee. You just have to credit income qualify for it. So if you have full entitlement and you find a home for $1.1 million, you can purchase that home for $1.1 million if you can credit it income qualify, and the VA will guarantee that $1.1 million home, and you will not have to put no money down. Would I advise you to buy a $1.1 million home with no money down? Probably not the smartest thing to do, but it's available to you. What can be financed? No tiny homes, okay? But you can do manufactured homes. You can do condos, townhomes, and you can do single and multifamily homes, right? Duplexes and fourplexes. Here in San Antonio, fourplexes are huge. I know quite a few people that have bought fourplexes where they lived in one unit for a year. The other 3 units were already rented out when they purchased. Then they move out and put another renter in there and utilize that for passive income. You can do that with a VA loan, okay? So don't let anybody tell you any different. Custom construction, you can also utilize the VA home loan. If you were told no, it's probably because that specific bank, lender, credit union didn't offer it, okay? There's 2 ways to do this. One is you find a company that has what's called a VA one-time close. So what that company can do for you is they can finance the land loan and the construction loan. And then at the end, they'll tie it all together into a VA loan with one set of closing costs. If you don't find a company like that, then you're going to have to go the traditional route, find a land loan, right? Closing costs, find a construction loan, closing costs. And then as that home gets to about 90% complete, then you'll look for a bank to refinance both of those loans into a VA loan. So it's a little bit more cumbersome. So try to find a company that has what's called that VA one-time close. And if you need help with that, please let us know. New builds. Here in San Antonio, there's a lot of new builds. I'm not sure what area you guys are in, but here's what we recommend for the new build communities. One is use a realtor. Why use a realtor? Well, first of all, when you're buying a home, your realtor's free to you, right? They get paid by the seller or the builder for bringing you to their property. So the realtor doesn't cost you anything when you're buying, all right? So that sales agent in that model home doesn't work for you. They work for the builder. So I would suggest you have your realtor with you to help with that negotiation process. You want to be careful of the incentives or true costs, okay? What I mean by that is they might tell you, hey, if you use our in-house lender, we'll give you so-and-so much money for credit, right? Just be careful and know where that money's coming from. The reason we say that is we had a young couple about 3 years ago. We taught at BAMC, and they came up to us and said, hey, we're building with so-and-so company. They offered us $17,000 in upgrades to utilize their lender. So we said, okay, well, send us the paperwork so we could take a look at it, make sure everything is legit. At that time, the interest rates were running about 4%, and they qualified for a 4% rate based on their credit and income qualification. Well, the builder was giving them a 5% rate, kind of to offset that $17,000. So we circled it, told them what to say, sent them back. They ended up getting a 4% rate, but they got $12,000 versus a 17. So not all builders are like that. It's just this one was. You just need to make sure you know where that money's coming from. Property taxes on new builds are a little bit different. Property taxes on that first year is probably just assessed on the land because the home is not fully complete. Then the second year, the property tax is assessed on the completed home plus the land, right? And it could be a sticker shock. So for example, I built in 2016 here in San Antonio. My first year, my property taxes were $800 because it was just on the land. The second year, it was $8,000. Luckily, both my builder and my lender told me what was going to happen, so I knew to put more money into my escrow account. So when the taxes hit, I had enough to cover, okay? VA appraisals, all right? The VA appraisals are designed to make sure that the home is safe, sanitary, and sound, and that's it, all right? This is not a home inspection. Home inspection and VA appraisals are 2 different things. The VA appraisals sets the monetary value for that home. A home inspection, that's for your peace of mind. That's where you hire a home inspector to go out and check the plumbing, the electrical, the foundation. They give you a report. Then you can utilize that report. If something's wrong, take it to your realtor. Your realtor will negotiate with the seller's realtor to fix those issues or decrease the price of the home if they don't want to fix it. All right. So again, VA appraisals, home inspections are 2 different things. House flipping is not allowed with the VA loans in the traditional sense. So what I mean by that is you want to buy a rundown home, fix it up, rehab it in 3 months, and then flip it and sell it. You can't do that. You have to intend to live in that home. And in most cases, it's up to a year. Then you can sell it or do whatever you want to it. So why use the VA loan? First, there's no down payment, right? With limited closing costs. That 25% guarantee that the government allows us to utilize this product with no money down. There's no private mortgage insurance, but there is a VA funding fee, and I'm going to cover that. So private mortgage insurance, if you were to utilize a conventional loan or an FHA loan, if you don't put 20% down, you're going to have to pay some kind of mortgage insurance. All right. And you're going to have to pay that every month until you get about 20% equity. And then you still have to request them to take that off. This is a lifetime benefit. This never expires. So don't have somebody tell you that, hey, you only have 10 more years left to use the VA loan, so you better use it. No, that's not true. This is a lifetime benefit. Multiple loans. You can have multiple VA home loans open at the same time, and I will show you how to do that. So don't let anybody tell you that you can't. And there's also faster recoveries from financial setbacks. So if you ever had a home foreclosed on, you can still use the VA loan if that foreclosure was a VA loan. It's just that you probably have a little bit less entitlement to utilize with the VA loan now. All right, VA loan myths. This is my favorite part of the class. What have you been told about the VA loan? The number one thing that we hear is I can only use my VA loan benefit for my first home, or I can only use it once. I can't tell you how many times I've heard this, and it's just flat out wrong. All right. If you purchase with the VA loan and you sell that home and it's out of your name, you get your full entitlement back. You can buy, sell, buy, sell, buy, sell all day long. Or if you bought with the VA loan and if you paid it all the way off to zero, you can ask the VA to restore your full entitlement, and they will one time, and then you can go out and purchase another primary resident while keeping that one. Or if you have a current VA loan and want to keep that home and then purchase another one and utilize that current one as a rental or Airbnb or whatever, you can do that. You'll use your second tier or bonus entitlement. Okay. Well, how does that work? Well, on your second tier and bonus entitlement, you're going to have to pull your certificate of eligibility and see how much your first loan was on that entitlement. All right. Now, if you have this is called partial entitlement. So if you have partial entitlement, meaning VA loan, you have one, you want to keep it, you want to purchase again, you're going to fall under a cap. The no cap is only for full entitlement. But in this case, again, you have partial entitlement, so you'll fall under a cap. What is that cap limit? The cap limit will be the county loan limit for whatever county you're going to buy in next. So if you're going to buy in Texas, right, you're going to get the county loan limit for whatever county you're in Texas or Virginia or whatever. 90% of the country currently right now, the cap limit is $766,550. There are some states that have higher limits, Alaska, Hawaii, and there are some counties in California and on the eastern seaboard that have higher entitlements. You just have to find that county, the county loan limit. So what you do, there's an exact calculation to this, but we figured the ballpark method. The ballpark method is you just take that home on your COE, whatever that loan amount is, and you subtract that from the county loan limit. So if your loan amount was $316,280, you want to subtract that from the county loan limit, and that's how much you have. So if I wanted to buy here in Texas again, I subtract that $316 from the $280. I have $450,000 or $270 left over to utilize again, no money down. But what if I needed more than this? Can I still use the VA loan? Yes. I just have to remember that every dollar that I go over, I have to pay 25% down. Why 25%? The VA is guaranteeing their portion 25%. They want to make sure you're guaranteeing your portion 25%. Okay. Now, dual military. If you are dual military, then we tell you, hey, you got Willy Wonka's, golden ticket, right? Because you have an entitlement and your spouse has an entitlement, and you can literally build a real estate empire, right? How does that work? Well, let's say, for example, home number one, you put that on spouse number one's entitlement, right? You live there for the 1 year or your first duty station. You move on to home number two. Home number 2, you put on spouse number 2's entitlement. Okay. Now you live in that for a year, or if that's duty station number 2, then you keep both of those homes. You move on to duty station number 3 or home number 3. You could put that under spouse number 1's remaining entitlement. So now you have 3 homes, right? 2 different entitlements. You want to keep all 3 of those, move on to home number 4. You could use the remaining entitlement of spouse number 2, or if you need more than that, you can actually combine remaining entitlements. And in this situation, you can have about $733,000 for home number 4. We personally know an Air Force couple over here in San Antonio, the lieutenant colonels. They just retired about 2 years ago, and they have 5 homes, all VA loans. So they have their primary and they have 4 rentals. Okay, so this is how this benefit can really impact your life if you use it correctly. If you use it incorrectly, it could crush you. So just be careful on how you use it and make sure you're financially stable to do all this if you choose to go that route. But it is doable. Myth number 2, I can't use my VA loan because I don't have a credit score above 620 or 650 or whatever, right? I usually ask, what do you think the minimum credit score is to utilize a VA loan? And then we get all sorts of answers. Well, Chapter 4, the credit and income qualification chapter, there is no credit score requirement to utilize a VA loan. However, there's no bank, lender, credit union on earth that's going to lend you money without a credit score. But why is this such a problem? Well, if you go to ABC Credit Union and their credit requirement is 650, if you don't qualify or if you don't have that score, what do you think they're going to tell you? Sir, ma'am, you don't qualify for the VA loan, right? But that's not necessarily true. You don't qualify with them, right? The right answer is, sir, ma'am, you don't qualify with us, but you should shop around because there's other companies that may have lower credit score requirements. And there are. I've seen a veteran with a credit score of 530 get a VA home loan before, right? Now, 530, the lower the credit score, the higher the interest rate. But to me, if I'm buying a home, I really don't care about the interest rate because at least I'm paying off my stuff. I always tell people interest rate on rent is 100%. You're losing 100% of your money if you're renting every month versus buying and preserving some of that in equity. So I really don't worry about interest rates when I'm buying. So credit scores are lender specific, okay? It's all up to that particular bank, lender, credit union, and what risks they were willing to take. Myth number 3, there's always a funding fee no matter what. The funding fee is a fee that you will have to pay to utilize the VA home loan benefit. There's 2 ways to get, there's 2 exceptions for a veteran to not pay this funding fee, okay? One is if you have a disability of 10% or more, and 2, based off the Blue Water Vietnam Veterans Act of 2019, is a Purple Heart recipients. So those 2 exceptions will allow you to be exempt from that VA funding fee. Spouses of disabled vets that have passed, or if they're in that category as a Gold Star spouse, then they too are waived from paying the funding fee. But how much funding fee do you have to pay? All right. If you were to purchase a home and you paid less than 5% down, then the first time you utilize a VA home loan, you will get charged 2.15%. The second, third, fourth, fifth, 100th times you use it, if you don't have any exemptions, then it's 3.3%. You can put a down payment if you choose. If you put 5%, you can knock it down to 1.5. If you put 10% more, you could knock it down to 1.25. Cash out refis, if you choose to do that, the first time use is 2.15% if you don't have that exemption, and 3.3%. All right. Now, let's do a comparison of a $500,000 home at a 680 FICO score, funding fee versus PMI. Okay, which one is better? Well, let's take a look. The conventional loan, I currently have this at a 7.63. These aren't today's rates. Rates are lower, but what I am showing is traditionally, the VA will have at least 0.5% lower interest rates than they would a conventional loan. So let's go back to the conventional side, $25,000 down, which is only 5%. That loan amount goes to $475. the PITI, which stands for principal, interest, taxes, and insurance. And these are based on San Antonio's numbers, comes out to set 3786. Then you're going to tack on PMI. So you didn't put 20%, you put 5%. So you're going to pay an extra $400 a month every month until you get the 20. And then you still have to request for them to remove that. That brings your total payment to $41.82. On the other side, no down payment VA loan, but you're financing $11,500 more due to the funding fee. The PITI on that at that interest rate is going to be $38.69. Zero PMI. So in this situation, you're going to save about $313. Now, situations are going to change based on loan amount, credit score, interest rates, down payments, so on and so forth. But what I'm trying to say is, if somebody's trying to steer you away from the VA loan to use another product, just ask them to show you the numbers, lay the numbers out side by side. And then if the numbers work better for a conventional or FHA or first-time buyer's loan or whatever product they have, then go that route. If the numbers look better for the VA side, then go the VA route, all right? But don't just automatically take somebody's word for it. Streamline refi program. I bring this up because the interest rates are starting to come down again. And previously they were in the 7s and 8s. So how that works is the Streamline refi program will allow you to just change your interest rate from like 8% to 4% or whatever the current interest rate is, right? You can do that 210 days after you make your first payment on that current VA loan. So 6 payments. All right. Be careful of what you receive in the mail. That junk mail, just throw it away. Go back to who you originally worked with or call somebody you trust, because there are some unscrupulous lenders out there that are just trying to take advantage. All right. And I tell people, you got to think of not only the monthly savings, but the long-term interest on savings if you choose to do this. If you're going to sell your home in the next 1 or 2 years, don't refi. Why? Because there's closing costs for refinancing. You may have to pay an extra $2,000 or $3,000. And if you're going to sell it next year, you're already putting yourself in a $2,000 or $3,000 hole, right? Where you're going to have to sell it for $2,000 or $3,000 more. Don't worry about it. But if you're going to keep this home for 6, 7, 10 years, right? Any long-term period, then it would probably benefit you if you could get a 0.5% reduction on that interest rate. Now, why don't people buy? One, they think it's too expensive. They think it's too difficult. I will argue that the VA loan is probably one of the most easiest loans if you work with the right people. Renting is cheaper. I can argue that all day. Famous one is I'm only going to be at 3 years. Okay. Right. How long are you going to be at the next duty station? 3, and the next 3, and the next thing you know, 15, 20 years just flies by. Right. And that BAH that they give you, you might not have utilized that in a good way. You might just paid rent your whole time, right? Fear of the unknown. So RMAs can be helpful. What an RMA is, it's a rental market analysis. We try to tell people that you need to have an exit strategy in case something happens, right? This exit strategy here will allow you to know what your house will rent for in case you get to that point where you had to rent it out, right? If you had to rent it out, you want to know how much you would be able to rent it out for before you buy the home. Why? Well, if your mortgage is $2,000 and you only can rent it out for $1,500, that might not be a good home to buy. But if your mortgage is $2,000 and your rental market analysis comes back and it says $22,000 or $2,100, you're in a better position, right? You always want to have that exit strategy before you go in. All right, that covers the benefit in a nutshell. Now I'm going to go over the process of, hey, you're wanting to buy. This is what we suggest. One is find a VA home loan specialist. Make sure you trust the people you're working with. This is the most amount of money you're probably ever going to borrow in your life. You need to trust the people you're working with. They're going to work your file, right? They're going to collect documents, pull your credit, pull your COE, do a VA home loan analysis, and then give you a pre-approval letter. Well, what documents are they going to need? For the most part, certificate of eligibility, your DD-214 if that's applicable to you, your W-2s, pay stubs, LES, bank statements, tax returns, bankruptcy and divorce decrees if that's applicable to your situation. Now, I ask people all the time, is this hard to get? This stuff is usually not hard to get, right? I tell people, if this is hard to get and you cannot give this to your loan officer or you cannot attach it to an email and hit send, you have no business buying a home. You're just not ready, all right? The pre-approval letter is different from a pre-qualification letter. Make sure you get a pre-approval letter. A lot of realtors will not take you to a home unless you have a pre-approval letter, right? Because they don't want their time wasted on somebody that thinks they're going to buy or thinks they have this amount. They want to know how much you're pre-approved for, and you want to know that too. If they're not pulling documents, if they're not pulling your credit, if they're not asking for your bank records, then whatever number they give you, do not go shopping with that number because it is going to change after they do all that stuff. Then you find your real estate agent. Make sure your real estate agent is knowledgeable on the VA loan. And just because they're a veteran realtor does not mean they're knowledgeable on VA loans. We did a class about 3 months ago over here, and a veteran came up to us afterwards and said, I wish I would have had this class 5 months ago because my realtor, who's a veteran, told me I could only use my VA home loan once, and I put $20,000 down on an FHA loan, and I could have saved that. So make sure you understand this benefit and how it works. All right, now once that lender once the realtor takes you on the tour of all the homes, you find one home and you submit an offer. If the seller accepts your offer, then they're gonna take that offer, send it to the loan officer. The loan officer is gonna send it to their processing team. They're gonna do the complete full application. They're gonna have you sign the initial disclosures. Then they're gonna order the VA appraisal, right? And that takes a little bit. That VA appraisal comes back. If that appraisal comes back and the value is at or above the sales price of the home, then you have instant equity and you don't have anything to worry about. But if the appraisal comes back lower than the sales price of the home, then you have some options. You can choose to walk away and keep your earnest money, right? You can agree to pay the difference between the appraised value of the home and the sales price. You can ask the seller to lower the sales price of the home, or you can ask the VA for a reconsideration of value, right? It's a ROV. So what happens is your real estate agent will get homes that have sold in the recent time period that weren't on the initial report, and they're going to work with your lender, and the lender's going to draft a letter to the VA and saying, hey, we would like for you to reconsider the value of this home based on the recent sale of these homes in this area. And then hopefully the VA will increase that price. So if they do, then you're good. If they don't increase the price, then you go back to the situation to where you have to make a decision whether you want to agree to pay the difference or ask the seller to negotiate that sales price of the home. All right. And always remember that the VA appraisal and the home inspection is two different things. Okay. Once that is done and you're waiting to close, do not do anything that can negatively impact your credit, or do not make large purchases utilizing cash out of your accounts. Why? Because before you close, they're going to check all your finances again and make sure everything is good. And I can't tell you how many times I've seen it to where some people, and I've seen a person lose their home because they couldn't wait and went out and bought a whole bunch of furniture and a car like a few days before they were closing. It makes an impact. So don't do that. Just wait until everything is good before you make any large purchases. Then you're going to go to the closing table, right? And you're going to sign 10,000 documents and then get the keys to your home. And then you're going to live happily ever after. How long does this process take from the time you go under contract to the time you get your keys? It's usually about 30 days. If you're working with the right people, it's usually 30 days or less. I've seen a 7-day VA home loan close before. 7 days from the time they're under contract to the time they get the keys. I've seen a 70-day VA home loan close. It all depends on two things. One, how efficient your company works that you chose. And then two is how fast can you turn in the documents when they ask them. All right. Closing time matters, especially if you're competing on a home. How? Okay, so let's say customer A is working with a company that traditionally closes in 60 days. Customer B usually their company usually closes 30 days or less. They submit a similar offer. I guarantee you that that seller is going to pick the one that closes in 30 days or less over the one that closes in 60 days or less. Why? Because they want to sell their home as fast as they can. They want their money as fast as they can. And two, the longer the closing times, the more stuff can happen and the more chances that deal will fall through. So closing times matters when you're interviewing for your lenders, okay? Now, closing costs. Buyers are responsible for appraisal fee, title fees, lender fees, the VA funding fee, the homeowner's insurance taxes, right? And some other fees. The seller is responsible for the transfer taxes, recording fees, inspections fees, the real estate agents, and a list of other fees, okay? Now, depending on what market you're in, if you're in a buyer's market, meaning there's too many buyers and not enough homes, right? Actually, no, there's not enough homes, or there's too many homes and not enough buyers, right? That's a buyer's market. So in that situation, you can get the seller to pay some of your closing costs because they want to sell their home and they know there's not many buyers, so they're going to wheel and deal. If you're in the flip side where there's not too many homes, but there's a whole bunch of buyers, you're in a seller's market. We've been in the seller's market for the past 2 years. It looks like we're slowly shifting to a buyer's market, but in the seller's market, the seller has the advantage, right? Usually there's bidding wars on the home, and usually you're paying over the sales prices at home or over the asking prices at home in order to get that. Lender closing costs, okay? Now these are different. These are specific to whatever bank, lender, credit union you're working with. The loan discount is up to you. So what this is they might say, hey, Mr. and Mrs. Smith, you guys qualify for a 6% rate, but there's a 5.85% rate available at a discount point, and this is how much it would cost. Okay, and they will tell you that. Or they will say, you're qualified for a 6% rate. If you need money to help with closing costs, you could take a 6.25% rate, and this is how much we can get you. It's called a rate sheet. So just ask them, hey, what are the different rates on the rate sheet say? The appraisal fee is state mandated, has nothing to do with the VA or title companies or the realtor. The VA funding fee we talked about. Now let's talk about loan origination. A lot of companies have a loan origination fee, and it's usually about 1%. Okay, on a $400,000 home, that's $4,000 right off the bat. Then they might have a processing fee. They might have an underwriting fee. They might call it an admin fee. They might have all these fees, and all these fees add up. This is what we suggest. Find a lender or credit union or bank or whoever that doesn't charge these. I purchased 4 homes during my career, and I overpaid every single time because I just didn't know. I didn't know there was companies out there that didn't charge all these fees, right? Now, in comparison, there might be a company that has a $500 or $800 fee that might have a better rate than the company that doesn't charge fees. In that situation, you just have to make a comparison and see which one is better, right? You might be better off paying a small fee, $500, $800 or whatever, for a 5.8% interest rate versus paying no fees with a 6% interest rate, right? The way I like to tell people is you shop around. The first time you get your credit pulled by a mortgage company, your credit's going to drop maybe 5 or 10 points, right? You have 45 days to get your credit pulled by as many mortgage companies as you want, and it will not affect your credit. That's your right as a consumer. So I tell people, take about 2 or 3 weeks, get about 4 or 5 different companies, have them pull your credit, have them show you what they can do for you, and then put them all on one email and then reply all, right? And tell them, hey, I'm going to go with the person that has the lowest fees and the best interest rate, and make them fight for your business. All right. You win in the end. There's nothing wrong with that. All right. That does it for the brief. Are there any questions or any comments, or does anybody have any questions on anything we covered?
I don't see any questions in the chat, Anthony, but we will give people a few minutes to do that. Okay. I'm also going to put up the link that goes with your QR code
Okay.
for the survey that they can do. But if you have a phone, then go ahead and scan the QR code. Don't don't type this long link in. But if you need the link, here it is. I will say that there have been people watching, and they have just been really overjoyed by the amount of information that you have shared with them. They've asked, will the recording stay up so that they can go back and look at it? And yes, there's a question here. Do you recommend waiving the finance contingency?
It's whatever's based on, best for you. I don't know. I think everybody has their own situation, right? But if you want to contact me, and if you have a specific, then I can walk you through it.
Okay. Awesome. Yeah, people have been very pleased when I told them that the video will be staying up. The session that you did for us 2.5 years ago has been the highest viewed video on our YouTube channel. And I think that's great because it means that people are using the information. This has been absolutely fantastic. So one thing that I think people might wonder is, why does their credit score go down when a financial institution checks it?
I don't really know. That's a good question. I guess because they just think that they're, about to take out a loan, and you know how loans, the outstanding debts will impact your credit. I'm not really sure. I've never had anybody ask that question.
I think that makes sense though, because I think it makes sense because then if you're looking at a couple of different places and these places are checking your credit, it tells them without telling them that you're looking at another major purchase. Yeah. So here's another question. Jose wants to know, can he buy land where he intends to put a house on? And if so, is there a time limit?
Yeah, so good question. Yeah, you cannot buy land itself and hold on to it with a VA loan, right? You have to intend to build on it. And I can't remember what the time stipulation is. I think it's 6 months. I'll have to double check. But the VA loan is intended to purchase. If you want to purchase land and build, you have to do that simultaneously. You can't buy land and hold on to it for 5 or 6 years and then, to try to do a construction on it with the VA loan. You're going to have to get a separate land loan, right? But if that time comes, and I'm pretty sure you can work with a company that has that VA one-time close, and they can take over that financing on the land loan, and then with that construction loan, and then roll it into one. I'm not entirely sure, but I think you can. But yeah, you cannot buy land with the intent to just hold on to it for a while. There is a time limit. I want to say 6 months to a year, but don't quote me on it.
It makes sense because the VA home loan is meant to put people in homes to live and not to be investments. So yes, but it's a great question.
Yeah.
Okay. Well, what we're going to do is we're not going to hold you here for questions. As I see them show up on our various platforms where we have the video, I will send the questions to you, and we will post the answers there for people. Thank you so much for being on with us today.
Yeah, absolutely. Whenever you guys need this class again, just let me know, and we'll run it back.
Awesome. Thank you so much. I'm going to take your slides down here for just 1 minute. I am just going to put up. My team would say I'm remiss if I don't share this information. If you are curious about our LTI Changing Focus Moving from We to Me program, which is a veteran transition program that supplements the DoD mandated programs, we're interactive, we're on Zoom, it's free, you can do it in your jammies. Your spouse can participate. We play with Legos. We paint. We have really good discussions about everything that you need to know about transition. Please go to this link. There's all the information that you need to find out when our cohort dates are coming up and to register. If you have any questions, there's also a link at the bottom where you can send your questions. So thank you very much, Tony. I'm going to close us out here. Thank you, everybody who's been on with us today. Have a great day, and we'll see you next month.
All right.
Bye-bye.
Bye.